go through some of these things, but I want people to look at retirement accounts in a new way. I just talked about authority. Again, don't let people scare you from doing things that the law allows. The law is the same for you, me, and Bill Gates, okay? So don't let anybody hoodwink you to tell you that you can't do it. Now, what I found in this, my 7 years in doing this specific market, is that not only is there a lot of misinformation, but there's a lot of axes to grind by people who have not your best interest at heart, but their own pocketbook. And so my financial advisory system, or the one I was in, didn't want me to tell the client, yeah, you can do this, but I can't help you, because effectively they take their money and it walks out the door that I'm charging 1.5% on, and it goes to buy real estate. And then my boss comes to me and says, why is Janice moving her money? And he scolds me, and his boss scolds him, and the whole thing just goes to hell. So my point is that you get a lot of bad information from people who have a vested interest in their pocketbook and not yours. Okay? We're going to talk about some different retirement accounts, what they are. I'm a firm believer in real estate in a retirement account. And again, there's a lot of CPAs out there who will say, well, you lose tax benefits. And I say, you know what, I've got this doctor friend Larry, and he doesn't even get to use them. So don't let a good investment pass you by. And I've got a guy right now in Seattle I'm trying to educate, commercial real estate broker, and he's probably going to let this deal go by because he thinks if he buys it in his 401k plan that he's going to lose tax benefits. I said, if it's a good deal, it's a good deal even if you didn't get the tax benefits, right? He magically thinks it's a good deal. He doesn't get the tax benefits in his retirement account because retirement accounts don't do tax returns. So he's going to skip it. You know, if somebody can hand me $1 and then I had to give him 20 cents back, it's still better than what I had before, right? So don't let the tax tail wag the dog as far as making dumb decisions, because frankly, retirement accounts are where a lot of people have money today. And that's where you don't have to use retirement account money for investments, but maybe your sister or brother or spouse does. We're going to talk at the end a little bit about asset allocation. Okay, so viewing retirement accounts in a new way. Again, most people, in my opinion, view retirement accounts kind of like the Rip Van Winkle. And I see on a constant basis portfolios with husband, wife, and I ask them, how did you come up with this? I'm just curious, but you got 28 different things. How did you get to 28 different mutual funds? Well, advisor number 1 picked these, and then we fired him, and advisor number 2 picked those, and advisor number 3, and they have what I call the Noah's Ark portfolio. They have 2 of everything, okay? So, you know, people fall asleep on their retirement accounts like you can't believe, and this is where you build up, like Reggie said, tax-free or tax-deferred income. And Congress is very good about not changing the tax rates per se, because even though not everyone reads the tax law, it's pretty obvious when the rate and the numbers in the brackets change. But what they'll do is they'll take away deductions, and they'll increase the phase-out limit. So your $100 that you just made to your church, you don't get to deduct all $100 anymore, because if you make too much money, maybe you get to deduct 60% of that. So Congress is really good about hiding the ball. At the end of the day, you will pay more tax money, whether they change the rates or not. They'll monkey around with other stuff because they need to raise revenue. So I tell people, learn some of these techniques so you can focus on building wealth, and if it's in a retirement account, great. Okay, I tell people this over and over, like my commercial guy now. I said, you know, it's not what you make, it's what you keep. So if you can make a good investment and keep all of it in your retirement account, so what if you don't get to do it out of your taxable money, where he's probably going to get the tax benefit? The problem that this guy has is he doesn't have enough money out of his taxable pocket to make it. So I said, make it in your retirement account. Don't worry about the fact you didn't get tax benefits because you couldn't make it there anyway, okay? So you got to think clearly, think with some focus on what you're doing. If it's a good deal, it's a good deal. It doesn't matter if it's in your retirement account or not. Okay, I had a guy about a year ago literally jump up in the middle of my presentation, and he said, you know, you're telling us all these great things, but what do you do? You know, tell us what you do, because I want to make sure you're eating your cooking. So I said, okay. So I told him, but it makes more sense if we can put it up here on the slide. So this is a situation happened about 1.5 years ago, and again, I like operating in kind of the stealth marketplace, because I bet I could talk to any one of you and come up with an opportunity for a transaction. Whether I can make an investment with you, lend you money, co-invest, whatever. So this transaction emanated at my neighborhood Halloween party. My neighbor comes to me, he's second generation family business owner, and says that big bank which again probably should remain nameless, but they have a stagecoach as a logo. He just gets a nice letter, says, oh, I'm very sorry, I know you've been doing business here for 100 years, but we just whacked your line of credit from $750,000 to $250,000. Have a good day. So the guy's just stunned. Well, he goes to other banks, and they're in the same position. They're not going to give a new line of credit. Everybody's whacking small business line of credits. So I'm talking to him at the Halloween party, and he's telling me this. I said, well, I don't know if I can help, but give me a week, and I'll get back to you. So his line of credit was very important to him to stay in business. So what I did is I like to have my meetings at a local watering hole. So I got 5 of my buddies, actually 4, myself and 4 others, and I said, here's the deal. And it usually helps if I buy the first pitcher because meetings go better. But I said, my neighbor needs $500,000, and to make it easy, let's form an LLC, and I'll do that. State of Washington is pretty easy. You get online and magic, really easy. So I said, I'm going to form an LLC. We'll call it whatever we're in the mood for. Come up with a name, but I'm going to name myself the LLC manager because I can operate QuickBooks, and my neighbor trusts me and all that stuff. And I said, okay, I could get 10 investors, but I like to keep the confusion to a minimum wherever possible. I said, how about 5 of us, and we each put in $100,000 apiece. And I said, I'm going to use my retirement account. And the reason I'm going to use my retirement account is because what we're doing is we're making a loan. And so my point here is that if you're going to end up with more rather than less, you need to understand what your investment dollar is going to. Don't expect you to understand the tax code, but if I make a loan to Reggie, like we did here, I'm making a loan, but my return is what? It's interest income, right? I didn't have any participation. But interest income is not favorably treated on the 1040 or on the California return. It's taxed at ordinary income rates. Interest income doesn't get tax preferred treatment like capital gains or the 15% dividend received deduction or any of that good stuff. So rental income from houses, if you have positive taxable rental income, that goes on Schedule E on your 1040 and it's taxed at ordinary rates. Interest income is taxed at ordinary rates. And I'll show you here in a minute what I was able to help some guys do. So I told my buddies, I'm self-employed, and my retirement plan structure of choice is a 401k. So I said, I'm going to take $100,000 out of my 401k and inject that, invest that in the LLC. I got my 2 other buddies, or actually 3 here. They all had IRAs. These 2 had traditional IRAs. This one guy had a Roth IRA. And I said, here's why, again, I'd recommend if you guys have enough retirement money that you make this investment in an IRA, because the return is going to go back right into your retirement account, and it's going to be tax deferred, because these are tax deferred retirement accounts. This guy, Roth, anytime you hear anything with Roth, that's a good thing. This guy is tax-free income. So he said, instead of making an investment with your taxable money and paying tax, if you've got retirement money, let's do this with a retirement account. You'll get to keep it all. Well, my friend here, number 4, John, he doesn't have a retirement account, so he had to use savings account money, taxable money. And every year when I do the tax return for the LLC, he gets a Form K-1, and he puts that interest income on his federal and his Oregon income tax return. So let's check this out. LLC made a $500,000 loan, 12% interest. The guy pays principal and interest monthly, doesn't miss the payment, he's always on time. And we actually took back some real estate he owned as security. So I didn't feel we had much at risk at all. So what's the result? Again, it's not what you make, it's what you keep. I want to stick more in my pocket, and at the end of the day, when I finally need that type of money, I want to have more rather than less. That's common sense. So let's look at 401k guy, which was me and my 3 buddies that used IRAs, and compare that to the one guy who didn't have retirement money and used taxable money. Okay, 100,000 piece that we all made times 12% interest gives us what, 12 grand a year in interest income. That's everybody got the same. The tax rate, I don't care what the tax rate is because I made an investment retirement account, and my retirement account doesn't pay taxes, so I don't care if the tax rate is 90%. But my buddy, between federal and state rates, was at about 40%. So the net proceeds to me back into my retirement account and my 401k and my 3 buddies in their IRAs was the 12 grand. You know, they don't get a haircut for paying taxes. My other buddy's going to net about 7,200. Okay, so my return on investment and our retirement account colleagues is 12. My buddy's only 7.2. Are there any other issues? Well, not really if I use retirement account money. But my buddy here, this money hits his 1040, and that friend of mine has 2 kids in college and 2 in high school that are about ready to go to college. He fills out a financial aid form, And on the financial aid form, if you ever looked at one, you'd much rather have lower income than higher income.
Right.
And for financial aid purposes, you could literally have $1 billion in an IRA, and they don't care because they don't expect you to zap your retirement account to pay for your kids' college tuition. So again, if you can get income off your 1040 and allocate that and make those same investments in a retirement account, it has all kinds of other wonderful side effects that are real positive. So my buddy calls me here not long ago and he says, does this income have to go on my tax return? I said, yeah, it's taxable income to you. You made it as a taxable investor. He said, I know, but the financial aid forms don't like that. I said, that's right. So, you know, don't be afraid and dismayed for making investments out of a retirement account where you otherwise might have said, geez, my retirement account's for mutual funds.